Hello everybody, welcome to another video. In this video we're going to go over how to identify conditions in the market. This is arguably one of the more important videos, one of the more important topics, and one of the most important ways to analyze the market. It will save you and help you avoid taking poor setups. And so identifying conditions is extremely important. And so, okay, here we are. In this AM session, what are we seeing in price? Okay, we see price does shoot up here. But what am I noticing? If you go left of the chart here, we haven't swept any liquidity. There is no liquidity level there to be swept. So I go on the 1 minute and I say, okay, we don't have any basis for a trade just yet. Let's see, what does price do here? Does it show me anything? And what do I do to identify poor conditions? So what do you notice price does from this point? Market open is right here. We come, take highs after highs after highs, reverse. And now we come and take this low from 9:30 market open. Alright, so 1 minute low swept. 1 minute high swept. What else do we notice? Well, let's see what price does. Do we form a direction? Do we come in all the way down here and chase this liquidity? Do we come and hunt this liquidity here? Because that's what optimal conditions would do. But look what we start to do now. We're just going back and forth now. There's not much direction. So what are we forming here? Well, here's where my eyes start to notice, and this is when I start to alert myself. Hey, we're in a range right now and we're not showing a willingness to head a certain direction. And again, what we're doing is we're sweeping 1 minute highs and lows and we're putting more emphasis on that. What do we do here? And so if we just keep doing this, to me, these are poor conditions. Again, 1 minute sweep right here. And so we're putting more emphasis on 1 minute highs and lows rather than the directional bias in the market. Look at all of these 1 minute highs and lows I'm marking out. And so that's where we start to come to the end of the session. So look at this session. We came, swept the 1 minute high here, 1 minute low, came up, down, swept 1 minute high here, 1 minute low here, 1 minute low here, 1 minute high here, 1 minute low here, 1 minute high here once more, and then we come back to these lows. And so throughout the whole session, this is what we're doing. And so these are not optimal conditions. We're not showing a specific direction. And so if you notice, from market open, we've gone 30 points to the downside and around 47 points to the upside. So this whole range hasn't expanded much at all. And so when you start seeing this is when my brain starts to go off. I see that, okay, we're taking this low, rejecting it. After taking this high and rejecting it, then we come high rejected, low rejected. I'm like, okay, I'm not seeing the delivery I'd like to see. And in this macro here, look what we do. We come up, come down, come up, and that's it. Look at the start of the macro, where we started to where we ended. Literally in the same vicinity. We come up for about 30 points and then come back down to where it started. So there is no clear direction in this market for this session, even though there are draws on price that we can gravitate towards. And so finding an optimal setup in this range is difficult, and you're better off staying away. Alright, so here's another example of identifying conditions. We're going to mark out this session. We're using the London session for this example. It applies to every session. This is the London session. Now, what do we see price do as the London session begins? And what are you noticing in price to begin the session? So right now, all right, what are we doing here to this point? Well, we come, sweep this high. We put emphasis on that. Then what else do? We come, again, another sweep of a high, another sweep of a high. Take this high right here. So we'll remove that. And what are you starting to see price do now, here, to this point? Sweep this low. Sweep this high. So although, let's say there are draws for price that we can come tap into, we're putting more emphasis on 1 minute highs and lows rather than going and hunting that liquidity. And so if I start seeing this occur and I don't see a change in the way price is delivering, to me, that's an indication of low probability conditions. And so what do we do again? Another high. Look, we take this 1 minute high, 1 minute low, 1 minute high, 1 minute high once more. And then we come 1 minute low here, as well as this one here. Respect that, put emphasis on that, and just look at this range that we've formed. This is what we've formed here for the session. And there's no change in the way price is delivering to this point. Again, take this high, 1 minute high, putting more emphasis on that. There we are, 1 minute low, putting more emphasis on that. And look at us just chopping around. When I see price doing this, and when you notice it not too long into the session, to you, what you should be thinking is, okay, unless I see price deliver a certain way, unless I see price pick up, right here, around here, unless I see price pick up, I'm not going to have an interest in being on the charts. Because there's nothing here that is tempting. We're just ranging. And so there is no drawn liquidity that price is gravitating towards. All we're doing is tapping into 1 minute highs and lows. And that's exactly what we do. And then we come and tap into here, and that's the session. Done. And so when you see this here, when you start to see this here, as the session begins, you start seeing we're going from 1 minute highs to lows immediately right here. Anywhere between 15-20 minutes into the session, you can see we've gone from 1 minute high to 1 minute low, and then we're back to that high. Immediately, something should snap into your brain and say, okay, look what price is doing. We're putting more emphasis on 1 minute highs and lows rather than any directional bias, rather than gravitating towards draws on the higher time frame. And so I'm going to be very cautious. Unless I see price change in the way it wants to deliver, I'm going to be very cautious in what I take. And so if you see price persist and remain that way, just go 1 minute highs and lows, 1 minute highs and lows, you have nothing to take. That's it. That's all. The conditions are poor. It's showing you this. And so you're just going to stay hands off. And that's how you identify these conditions. It's clearly putting more emphasis on 1 minute highs and lows rather than its directional bias or draws on liquidity on the higher time frame. All right, so what are we seeing price do to this point now? If you pay attention here, we see price is tapping into a bullish 50-minute fair value gap right here that we have tapped into. Heading into market open, do we have any draws for price to gravitate towards? Well, what do you see right here? Buy side liquidity all the way up there with several highs here resting above. So look at all of these highs here. Low resistance liquidity right here for a clear draw for price to tap into. So price here is definitely an area where we can expect price to gravitate towards. And so our job is to see, okay, is price delivering well and giving us an opportunity to take that trade? And we see, okay, here to this point, what has price done? Okay, look on the 1 minute. 1 minute has several highs here above as well. Drawn liquidity here in the direction of the higher time frame draw right there. Okay, so there is draws on price. We come, sweep all of these internal lows right here. Internal sweep right here. Heading into market open, tap into that 50-minute bullish fair value gap. And bang, look at that expansion off market open. And so look at the difference in the way price is delivering to this point. Look at the difference between range-bound price action versus this type of price action. We go above and beyond the range, and now we're expanding past it. So we're not putting any emphasis on 1 minute highs and lows. Rather, we're paying more attention to the higher time frame draws. And so we form that gap right here off these internal sweeps right here in price. And we have the direction for buy side right there. And so for almost a 3-to-1 R, we get the direction of our trade. We have the drawn liquidity. And price is showing that there is a potential willingness to deliver well, because we're not putting emphasis on 1 minute highs and lows. And upon the entry, price is beginning to expand to the upside here. So instead of taking this 1 minute high right here, if there was poor conditions, we would take this 1 minute high right here after this 1 minute candle, and then you would see price, instead of going like this, price would do something like this and come back to the lows and that. But instead, what we do is this. And so that's an indication that we're going above and beyond where the 1 minute highs and lows are. We're not putting much emphasis on those 1 minute highs and lows. Rather, we're putting more emphasis on the higher time frame draws and bias. And so let's see if price gravitates to that high. And as you can see, that's exactly what we get. So around 134 points around to that high. Low resistance liquidity. There is a clear draw for price, and price is delivering well. Why? It's not range bound. It's not putting emphasis on 1 minute highs and lows. Rather, it is putting emphasis on where it has to do damage on the higher time frame, rather than just putting emphasis on the lower time frame. And so you see it immediately off market open. Whereas the other times the market open was within the range, the market open was dead, and there wasn't much direction in price yet. And so these are some tricks that you can utilize to identify conditions and take advantage of knowing when to take proper trades. So I wish you good luck, good trading, and take care, everybody.